Hello clients, I'm excited to continue my monthly videos at Harborfront Wealth to share my thoughts on the markets and financial planning tips to consider. Check out my new website at ppwgroup.ca. The link is below. There's something called the VIX, or the Fear Index, I want to talk about in today's video. The VIX measures the market's expectation of 30-day volatility for the S&P 500. When the VIX values are above 30, it could indicate greater market fear, while values below 20 suggest stability. Investors sometimes use the VIX to assess market risk and sentiment. So, where is the VIX today, and what could it be telling us? Last Friday, the VIX nearly hit 29, which could suggest greater market fear, as I mentioned. However, the S&P 500 was near all-time highs. Here's a chart showing what happens when we see a high VIX reading and the S&P 500 is near all-time highs. As you can see in the title, this is actually quite bullish for the markets. Since 1990, the previous times we saw anything like this kicked off huge melt-ups in the late 90s and 2000 to 2001. Now, eventually we saw this signal mark the peak, but the first signal, like we are experiencing now, in previous clusters saw very strong future returns. Bottom line, I believe the markets could still keep going higher well into next year, and I'm positioning clients to take advantage of this. As always, I'll stay in touch next month with my thoughts on the markets. Talk soon.